Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Matterport was once a high-flying stock in the market, but it's really fallen back to earth, really fallen to value territory. If you pull out the company's cash out of its market cap, the enterprise value, net enterprise value, is less than $300 million right now. So there's potentially a lot of value if the company can turn around operations. So I have three predictions for the company, and these are the things that I'm also watching as earnings come out the next few quarters. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. It really helps out the show, and share this channel with anybody you think would be interested. The first prediction that I have for Matterport is that we're going to see a lot more services revenue in the future. This is a look at the company's most recent quarterly report. One of the things that they were really trying to grow was subscription revenue and try to get away from product revenue. Product revenue is selling things like cameras. They used to have a custom camera that they use. Now you can use an iPhone or an Android phone. But the product revenue is relatively low margin, not the type of high margin business that you want to have. So they're trying to really limit that and move more to subscriptions, which are very high margin, 75% in the most recent quarter. Services, not nearly as good a margin at 26%, but it's really facilitates the business and facilitates getting more customers into those subscriptions. If you're a company that, let's say, wants to have Matterport of all of your restaurant locations so that you can figure out how many sprinkler heads you have, how many ovens you have, how many of any number of assets. It sounds crazy, but these companies that have thousands of restaurant locations don't necessarily know exactly what is in each location. You kind of lose track of those assets over time. So one of the ways to track that would be to use something like Matterport, so you can actually see these assets digitally. But they don't want to necessarily go out and capture those Matterport images themselves, so they contract that out to a company like Matterport, who then also can contract it out to somebody else. But that really opens the top of the funnel. So it's not only a money maker itself, it actually helps grow subscription revenue. So I think that we're going to see Matterport lean into a lot more of those services and actually kind of hand holding customers into more of their products that might be a little bit higher margin in the future. The second prediction thing that I also want to see, I think we really need to see as investors, is also on this page, this line item right here. Total non-GAAP operating expenses dropped $6 million from a year ago to $42.5 million. That number needs to at least stay flat as revenue grows, if not come down. Operating expenses is one of those things that companies that are not profitable really need to keep an eye on and keep contained. So I want to see this number come down. I would also love to see the stock-based compensation number come down. That is just an astronomically high number for Matterport, and could be a deal breaker, to be honest, if they keep giving out that much stock-based compensation, because it really eats away at the potential upside for investors. But look for this operating income number, whether you're looking at a non-GAAP basis or a GAAP basis, to start to trend downward. At the very, very least, it has to be flat, because you need to see that operating leverage kick in to get anything near free cash flow positive or net income positive. And the third prediction is that we need to see Matterport get to free cash flow positive by the end of 2024, or the company, I think, is ultimately really in trouble. They do not have the kind of technology that has a really wide moat. They don't have a big business. And now they don't have the technology piece either with the cameras. So competitors that see a lot of value in the technology that they built could essentially just copy it. So they need to build out that asset base, that subscription base, and start to become a platform. They're not necessarily going to be able to charge a lot to each customer for the platform that they have, but if they can expand the use of the Matterport platform for all of these different use cases, like construction, like insurance, I think that's going to be a phenomenal place for them to be eventually long term. But they need to get to that sustainable point, positive free cash flow, within, I think, the next 18 months. This is what the market is looking for. It would, if they were able to do that, it would show the kind of growth that you need to have as a company. And that's ultimately what will drive financial returns for investors as well. But what do you think about the future of Matterport? Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. And thanks for watching, everybody. See you here next time.